What's going on, everybody? Welcome back to the channel. We're going to be breaking down a play that we took live on stream and as well called out in Discord. With a little bit over 80% play. If you took 0 days, probably hit 150%. Some of the members. I'll be breaking down why I decided to go long after the big sell-off and a big bearish day yesterday, as well as a gap down today. So first of all, I want to say this. Anytime, and if you follow my Twitter, I've mentioned this before, anytime there's a gap down, I look for the bounces. Now, if you have a gap up, right, if let's say the day before is bearish and then you gap up, I'm looking for a bearish play. If you have a day that is very bearish and then you gap down, a lot of times I'm going to look for a bounce play there towards the open because a lot of that selling has been exhausted and the people that are holding those puts and short positions the day before are going to look to take profits with a gap down. And it happens very often. So let's go quickly on the daily and then draw all the levels again. So you guys can see yesterday, big red day, big bearish day, and then we had gap down to about 444, so we're right into this level. So pretty much the halfway level of this gap. Again, now my bias going into this is going to be like a very big bearish day the day before, gap down, look for the seller's exhaustion to try to catch a bounce, pretty safe play, something like that. So first I would have my tool right here. So this is the gap, this is the daily gap. So I'm looking for the gap to either, if it doesn't get filled, look for a bounce somewhere around the middle point. Similar to how I like to play for value gaps, and also had some level support around this peak here. As you guys can see, this was some previous resistance, which is whole area, and just kind of this two tops. Really, this one not as much, is more like a gap. So I'm looking for like a bounce around this play. So that's kind of my bias going into today. Now zooming in on the smaller time frame, we had a couple different things. First, we had one of the signs I look for reversal, which is an upside down bear flag, or I don't have a better name for it. But a lot of times you guys are familiar with the setup. It's a bear flag. Move down, you go sideways, and then move down. See how it's kind of pointing towards the upside right here. Now, here we go to, doesn't mess with that. Now, if you ever move down, but then you start moving this way, sideways this way, you're going to look for a breakout. This is usually signs of reversal. Is it going to reverse every time? No, but now I have something I'm looking at. I'm like, okay, this is going to be reversal after gap down, after my bias is looking for bounces, and we're on a support level. I know that my stop loss can be very tight, and I have what I'm looking for, which is the reversal conditions. Now, you see this, you hit this orange level, the halfway point ahead of this fair value gap. You take out this level and you close above. Again, I'm like, okay, we took out the level, but we closed above it. Sign that we probably took out liquidity, and there was orders that filled and pumped it up. Now I'm not getting in just yet. I need to confirm with a higher low. So then I draw my little upside down bear flag here. And if I was if I felt more risky or whatnot, I could have just got in here. But I told the stream, I told you guys to not. It could just bounce and kind of moon, and you do miss the play. But the safer play is waiting for this higher low here. And if you get on the smaller time frame, you can see this a little bit better. You kind of want to clear after the big candle, the big green candles, retrace about at least to the golden pocket, I would say, to be the extra safe. As you can see, this pretty much cleared it and hold that golden pocket from this little move. Or if you did form some kind of fair value gaps, fill those up. And then that's your entry, and your stop loss will be that low. Or if you're going to be a little more risky, if you're taking, like, let's say, a few days out expiration, you can make it at the very bottom of the gap. In this case, our entry was exactly right here, this orange line. Looking to target these highs, looking to fill the pre-market highs, which will be that gap that we created from the overnight. So our top target was 446.50. So we got all out. And the stop loss will be a little low. So now look at this. You have almost a 1 to 4 risk reward. It'll be a little less than the risk reward, probably be realistically around 1 to 2, 1 to 2.5 after you're taking partial profit, because it's very hard to just buy here and hold it the whole move up unless you get balls of steel. And then we also did have news at 10 a.m. So to keep that in mind, we took a first profit around this early level here. If we did not have news, my first profit target, rather than being here, would have been this high, and which also is this 5-minute fair value gap from today at a 30 candle, which was a candle of resistance. And then we did see that resistance. I try to tell everybody to just hold, take your profits, but do hold because there's a good chance this will look for a dip, but then end up taking out that liquidity that's formed at the top, which end up doing. The reason being is because after a big move up, like you had this big breakout, pullback is fine, right? Even though it's kind of big red candles, relatively big red candles. But it was all part of it. And also retesting this breakout. Now you didn't retest it all the way, but you tested it well enough that you just kept on going. When you had this breakout here, and nice, I could someone would ask me like, oh, would you ever add or anything like that? What I would add is if you retrace like a golden pocket maybe, then I could have added, or being a secondary entry. But other than that, if I'm already in, I'm not gonna look to add on any. I'm just gonna let my play out versus looking to add and kind of get greedy with it. Even though it probably would have worked on this play. Anyway, that was like the main. There was the kind of like the steps that I looked for this bounce. Again, I didn't want to go short. If, let's say it did tank. My question is, where's first of all my stop loss? Like, say I want to go short here, right? You get up down and you're short here. I know I'm in a major support area. I know I got up down. I know I had a big bearish day. And I see some kind of crazy news, like some really hot CPI or something. Where's really my risk reward and where's my profit target? Like, maybe you fill the gap, right, 443, but then you put a stop loss like above here. The risk reward doesn't feel that good. So that's why my bias was towards the long side. And again, you had this upside bear flag, again, just showing you that signs of reversals. Price is slowing down. And as I said, guys, this is all traded live, streamed, and posted in our Discord. You can see the whole team pretty much ate. If you want to trade with me live every single day, I trade live every single day. No matter where I'm at. I'm currently in the mountains, in the Alps, getting lost, falling from waterfalls, but I still find ways to fucking get Wi-Fi and trade with the team every single day. Make sure they're learning, they're making money, educating themselves. And if you want to trade with me, link is in the bio. Leave a like, subscribe. As always, peace.